Hey everyone, welcome to wealthtrix channel. Have you ever wished you had extra cash for a new gaming console, that dream vacation, or even to start saving for college? Well, guess what? You can start building wealth right now, even as a teenager. Today, I'm going to show you exactly how to start investing, make smart money moves, and build a solid foundation for your financial future. We're talking about taking control of your money and making it work for you. Imagine having a nice little nest egg built up by the time you graduate. Wouldn't that be awesome? By the end of this video, you'll have the tools you need to make that happen. No more waiting or winning the lottery. This is about creating your own financial success story, one step at a time. Let's dive in. So, you might be thinking, investing, isn't that for old people with suits and briefcases? Nope, not at all. In fact, the younger you start, the better. You see, time is your secret weapon when it comes to investing. It's all about this little thing called, think of it like a snowball rolling down a hill. The earlier you start rolling that snowball, the bigger it gets over time. Starting early gives your money the absolute time to grow. It's like planting a tree. The sooner you plant it, bigger and stronger it'll be in the future. Even if you can only invest $10 or $20 a month, that's totally fine. The important thing is to start building that habit and let time work its magic. Alright, before you dive headfirst into the world of investing, let's take a step back and talk about goals. Just like anything else in life, having a clear vision of what you want to achieve with your investments is crucial. Ask yourself, why am I investing? What am I hoping to achieve with this money? Is it for your first car, a down payment on a house, maybe a college fund, or perhaps you just want to build a solid financial foundation for the future? Whatever it is, write it down and be specific. Having these goals in mind will help you stay motivated and make smarter investment decisions. Once you have a clear picture in mind, you can start exploring different investment options that align with your timeline and risk tolerance. Let's break down the different types of investments. It's not as complicated as it sounds. First, we have stocks. Buying a stock means owning a piece of a company. Think of it like buying a brick in a Lego castle. If the castle grows, so does your brick. If the company does well, your stock's value goes up. But if it struggles, the price can drop. Next, bonds. Bonds are like IOUs. You lend money and get interest back. They're less risky than stocks, like a reliable friend. Finally, index funds. They're baskets of different stocks or bonds. Great for beginners, not all eggs in one basket. Now that you know the basics of different investment types, let's talk about how to actually get started. The good news is, investing has never been easier thanks to technology. There are tons of amazing investing apps out there designed specifically for beginners, even teenagers like you. Some popular options include Fidelity Youth, Acorns, and Greenlight. These apps make investing super simple and accessible. They often have low minimums to open an account, sometimes even just a few bucks. Plus, they have educational resources and even parental controls to keep things safe and sound. If you're in the UK, check out apps like Hargreaves Lansdowne or Moneybox. They're perfect for young investors too. Just download one, create an account, often with parental approval. Hargreaves Lansdowne or Money Box. They're perfect for young investors too. Just download one, create an account, often with parental approval, and start exploring. You'll be surprised how easy and even fun it can be. Before you start investing, let's talk about some golden rules for smart and safe investing. These tips will help you make the most of your money. Start small. You don't need to be Warren Buffett right away. Even $5 or $10 a month is a good start. Think long term. Investing is a marathon, not a sprint. The stock market will have its ups and downs. Don't panic sell. Consistency is key. Set up automatic contributions if possible. Never stop learning. Stay curious and keep educating yourself. Knowledge is power, especially with your money. Follow these tips and you'll be on your way to a bright financial future. Okay? Before we go any further, let's talk about the foundation of healthy financial habits. Budgeting. I know. Budgeting might sound about as exciting as watching paint dry, but trust me, it's crucial, especially when it comes to investing. Think of it this way. You wouldn't try to build a house without a solid foundation, right? Well, your budget is the foundation for your financial future. It helps you track your income, expenses, and most importantly, how much money you have available to invest. Now, budgeting doesn't have to be complicated or restrictive. A simple way to start is by following the 50-30-20 rule. This rule suggests allocating your after-tax income as follows: 50% for needs, 30% for wants, and 20% for savings and investments. That's $240 a year that can be working for you in the market. Let's talk about a key strategy used by seasoned investors: diversification. You might be tempted to put all your eggs in one basket. Diversification is about spreading your money across different asset classes to reduce risk. Think of it like choosing toppings for a pizza. Would you want a pizza with just one topping? Probably not. A mix of toppings, just like a mix of investments, is more satisfying. So, how do you diversify like a pro? Remember the main asset classes: stocks, bonds, and index funds. Each plays a different role in your portfolio. Stocks offer high growth but higher risk. Bonds provide stability and regular income. Index funds offer a balanced approach. Diversifying creates a safety net for yourself. Let's talk about common investing mistakes to avoid. Even seasoned investors make mistakes. First up, chasing trends. It's easy to get caught up in the hype when a stock skyrockets, but blindly chasing trends is a recipe for disaster. Another mistake is going all in on a single investment. You don't want a portfolio with just one investment. Remember, investing is a long game. It's about building wealth steadily over time. Before we wrap things up, I want to leave you with one final and perhaps most important piece of advice: invest in yourself. You've heard the saying, knowledge is power. Well, it's especially true in the world of finance. The more you learn about money, investing, and building wealth, the better equipped you'll be to make smart decisions and achieve your financial goals. Think about it. You're already ahead of the curve by watching this video and taking an interest in your financial future. Most people your age haven't even considered investing yet. So, how do you invest in yourself? Read books on finance and investing. There are tons of amazing resources out there, written specifically for young adults. Listen to podcasts. There are countless gift that keeps on giving. So, there you have it. A crash course on investing for for teenagers. Remember, you don't need to be a financial expert to start investing. The most important steps are to start early, invest consistently, and never stop learning. Ready to start your investing journey? Drop a comment below with your financial goals, and let's keep the conversation going. Give this video a thumbs up if you found it helpful, and don't forget to subscribe to the channel for more videos on personal finance, investing, and building wealth. Remember, the sooner you start, the more time your money has to grow. Start small, think big, and let your money work for you.